Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Hello and welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. The Nifty's unbeaten run continues for the 7th day running, although the index did face some resistance above the 20,950 odd mark in yesterday's trading session. Thursday now also marks the weekly options expiry session for the Nifty, and this consolidation could continue until Friday when the Monetary Policy Committee announces the latest interest rate decision. How should you be investing in the markets now at record highs and also right ahead of the RBI policy? We will tell you all, but first up the top headlines we're tracking for you this hour. Indian stocks are likely to consolidate on Thursday as the Nifty undergoes its weekly F&O expiry and traders pause to digest stunning gains over the last 8 trading sessions. Banks likely to be in the top shape today. Investors are trawling to chemicals and software sectors to find out beaten down stocks in a rally that has already made the Lal Street the best performing market over the past week. More gains are expected in metals, defense and PSU banking counters, analysts say. Very good morning to all our viewers and good morning, Shail. Well, over the last 7 sessions, the Nifty has surged 1,200 points now, and in case the index ends higher even today, it will turn out to be the longest winning streak in 6 months for the Nifty. The last 3 trading sessions this week already, we've seen that the Nifty is up 3.3%, turning out to be the best week for the index so far since July of 2022, when the index had actually gained about 4% odd. What are the expectations with the macros now aligned only for the bulls to take shape?
Good morning, Sakshi, and a very warm welcome to thousands of viewers who are joining us on a daily basis to get the best coverage on the Lal Street. It looks to be a day of consolidation, and there are 2 reasons behind it. Of course, we've rallied very sharply, 900 points in the last 5 trading sessions. That's a gain of 4.4%. Nifty is actually the second best performing index globally on a 5-day basis. The top slot is with Bank Nifty. So both these are with the Indian markets. And today, since it's the weekly expiry, Sakshi, I am expecting that you'll have a sideways trend, just as you had a sideways trend on Nifty Bank yesterday. Of course, we are at 20,937. The texture, tone and tenor of the bull market remains in place, and definitely it's going to be blue chips that are leading the front this time. We've already seen mid caps and small caps outperform in the month of September, October and November. December belongs to blue chips, and it's fairly evident in the last 5 or 6 trading sessions. Now, given the fact that tomorrow you have a major event when it comes to the Indian markets, which is the credit policy, I think markets are going to pause till say about 10:10 a.m. That's the first 10 minutes of the governor's speech. The Reserve Bank of India Governor Dr. Shaktikanta Das is going to address markets at 10 a.m. Within the first 10 minutes, we'll know what the tone and texture of his speech is, and then perhaps we'll start resuming the uptrend. So a pause today and a pause for the first hour of trading on Friday. The other good point, Sakshi, is that crude oil is now much below the $80 mark. In fact, it's below $75. $74 is what crude oil is trading at, and you'll see the graph in front of you. This is a 6-month low. We've seen these prices on 1st of July 2023. This is a very big, very positive development for bulls on Dalal Street. You'll see oil marketing companies that are doing phenomenally well. You will see aviation stocks outperforming. You will see paint companies outperforming. So this underlying pain point of Indian markets, Indian balance sheet, Indian economy, which is the crude oil imports, they are getting cheaper and they augur well for Indian equities. Of course, our foreign friends are on a buying frenzy, and that is reflected on the very, very sharp increase in delivery on Nifty stocks, mainly banks. So that is a movement that is likely to continue, and the fact that 21,000 is within reach, the gift Nifty is already pointing towards it. Let's see whether it happens today or tomorrow, but that's the stepping stone for better and brighter future. Remember, it's the pre-budget rally, the Santa rally, that is still to be left, and that is what we are looking at. In terms of strong supports and resistances, well, the support is now getting raised above and above. Till about a week ago, it was 20,300, 20,400. Now it's 20,900 and 20,850 on the Nifty, which are key support levels for bulls. And of course, as you rightly mentioned, 21,000 for the moment, 21,200, 300 appear to be resistances, but they will be overcome with due corrections and with the due uptrend in place. Sakshi.
Right, Shail. Now, as far as the Nifty Bank is concerned, on the weekly options expiry session, the Nifty Bank witnessed some resistance above the 47,000 mark also. We had a bout of profit booking in the second half. In fact, right in the beginning also, we did see some bit of profit booking take place, which led to the index shedding about 200 points. However, the index is still up about 2,000 points in just the last 5 trading sessions and 8,000 points higher in the recent, from the recent swing low of about 38,613. How would you be really looking at the Nifty Bank now and the big heavyweights and how their performance is turning out to be?
So Sakshi, 5.5%. That's the exact tally that the Bank Nifty gained over the last 5 trading sessions. Yesterday, a 200 point either way move of the Nifty Bank really doesn't matter, because this is a very, very volatile index, and it was the weekly expiry after a very substantial rally, the points percentage that you and I have mentioned. So again, I'm hoping that it's the Bank Nifty which will take the baton from the Nifty. Nifty is resting because of weekly FNO expiry today. Bank Nifty is fresh off the block. The fresh weekly expiry for December 13 starts today, and we've seen very, very strong traction coming into stocks like PNB, stocks like State Bank of India. Of course, ICICI Bank, HDFC Bank and Axis Bank have shown phenomenal rise in deliveries when it comes to the last 4 or 5 trading sessions, and that is reflected in their prices. But outperformance is seen on SBI and PNB. Remember, these are high beta, especially PNB, and that is something that you need to look at on the long side. When you look at the trading range, Sakshi, it's 46,500 to 46,000, which are key support levels, and of course 47,300, 47,500. In fact, Sakshi, let me add this. There are lots of voices in the market that are looking at 50,000 on the Bank Nifty in the medium term, say 2-3 months. And that is what needs to be looked after. This is, yes, a trading market, but it is a better investing market. It's a phenomenal market where you can buy and hold and make more money than trading on a daily basis. We've done a show yesterday on mutual funds at current levels, discuss 6 funds with a top wealth creator, and you need to pay attention to that. Buy and hold, Sakshi, will give you more money than trade, either sell and buy or buy and sell.
Okay, buy and hold, that's the strategy clearly. In the FNO space, Shail, what would you be watching out for today?
Sakshi, I'm keen on State Bank of India. The movement paused for a bit yesterday because it was Bank Nifty's weekly expiry. At 610, you see a lot of decline on the open interest, which means that shorts are getting covered yesterday. So the rollovers are on a stronger side at 610.45 in futures. It was a flat close yesterday, but my hope is that you will see an uptick coming in, and SBI is one stock that has a very, very strong balance sheet, phenomenal results, drop in NPAs, drop in gross non-performing assets. And it's only a matter of time. When I speak to a lot of analysts and I speak to a lot of experts, they believe that a fresh high on SBI is a matter of time. The fresh high, the previous high was 628 rupees. So at 610, a positional long can be considered. Again, remember, this is all technical and optional data, and data that we get from a lot of experts that we speak to on a daily basis. So should you want to take a long position, you need to consult an independent view as well. Sakshi.
Fair enough. Let's look at the global cues then. The US stocks ended down on Wednesday, pulled lower by the mega caps and the energy shares as a sign of cooling off of the jobs market. Overnight, the Dow Jones declined for the third day in a row, ending about 0.2% lower. The S&P 500 fell 0.4%. The Nasdaq ended with losses of 0.6% odd as well in trade. The Asian markets in turn also opened lower, mirroring the overnight action from the Wall Street as investors awaited trade data from China and from Australia as well. As far as the gift Nifty trends were indicating early in the morning, we did see a slight bit of negative opening to flat to negative start for the gift Nifty was something that it was pointing out to. Right now, we see the gift Nifty is somehow trading flattish at this point in time as well. Now, when we talk about the flows, FIIs turned net sellers for the first time in the last 10 consecutive sessions, offloading shares about 79 to 80 odd crore rupees. The DIIs bought about 1372 odd crore rupees worth of stocks on December 6. Provisional data from the NSE has given us this data as well. And of course, like Shail, you pointed out, of course, it's important to watch out for the oil cues with the WTI crude falling below $80 a barrel as well. The fifth consecutive day of decline for the crude oil prices as well. At this point in time, let's welcome our guest on the show. Devarsh Vakil now joins in. He's the Deputy Head of Retail Research at HDFC Securities. Devarsh, very good morning to you. Thank you for taking the time out. Tell us, how are you looking at the markets at these record high levels of 20,937 that we saw yesterday? And of course, how the macros are shaping up now with the oil prices falling for the fifth consecutive day. Is there going to be another tailwind for the Indian markets to perhaps move even higher from here? Or do you see valuation as a resistant point?
So thank you for inviting me for the show. So as you pointed out, as an economy, we do get benefit from the lower crude oil prices, and that will also help us, our oil marketing companies and other crude users. The final nuance is that the Nifty companies' earnings are actually positively correlated to higher crude oil prices because of the larger weight of companies which benefit from commodities. So that's one point which we need to remember. Second is that the beyond the point, if crude oil keep on falling, that is also a red flag. It will also be an indicator whether the global growth is slowing down, and that is resulting into lower crude oil prices. So lower is better for us, but too much lower will also start raising concerns about global growth in an environment where most of the producers are cutting supplies. Still, crude oil prices are not able to sustain higher prices. So that will be also a factor which we will consider later. One more point is that whether this correction in commodity prices, especially crude oil prices, is on back of the slowdown in China and US. So the recent numbers which came out from US businesses, the ADP company, there was another sign of slower hiring. Only 1,03,000 new jobs in November, while the consensus was 1.2 lakh, 1.28 lakh. So, and the other data which came, 1.9 lakh jobs were expected, only 1.5 lakhs increase happened. So there are clear telltale signs of US economy slowing down, and that is also a factor which we will watch out for. So right now we are into a short covering spree, and as we see from the derivatives data that many people who were short had to they were forced to cover their shorts, especially the FPIs. Now I think that phase is over. We have seen the data yesterday, and now the short covering ride which we had for last 3-4 sessions is over. Now we need to be back to the individual fundamentals of these stocks, and that's where we will discuss the ideas.
Right. Good morning, Devarsh, and a very warm welcome to you on Market Today. Let's discuss individual stock charts and technical positioning in frontline blue chips. What do you like there, and maybe some stocks which look good on technical charts that you can share with our team?
So I look at stocks from the fundamental perspective, Shell. So there we like two sectors. One is obviously the banking, and that's where larger banks have already performed, likes of ICICI and am I audible?
Yes.
Yeah, okay. So likes of ICICIs and Axis have already performed, but we continue to like the banking as a sector. So uh, 30 to 40% of the portfolio should be there in the banking and financial side. And there we recommend Federal Bank. Federal Bank still has some room to move. It has emerged as one of the best-in-class mid-sized bank, and we see a clear, visible pathway towards emerging as a top tier bank in the medium term. They have done a lot of excellent fintech tie-ups, and I think those will lead to greater productivity, and that will add to its ROA. So we have a very high conviction buy on Federal Bank, and we think that the another 20%, 22% upside is possible in this bank's stock prices in the year to come. So Federal Bank with a target of 190, we have issued a report. So those investors who are looking to add to the banking exposure, maybe look at now, and if there is any reduction, add to this company on a lower side. So Federal Bank is one more idea from our side.
Okay. 155 on Federal Bank, 5% higher for this entire week. 190 as the target price. 22% upside is what Devarsh is looking at. What we'll do is we'll quickly take a very, very short break. When we return, we can discuss more stocks with you. Devarsh, stay with us.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Welcome back. You're watching Business Today Television. This is Market Today. I'm Sakshi, and with me is Shail Bhatnagar. Also with us is our guest, Devarsh Vakil, who's been talking about Federal Bank as a stock pick at this point in time in the current markets, and this stock could be added even at the current levels. Which is the second stock that you would advise now, Devarsh?
So second sector where we have a longer term bullish view is the gas segment. It is the cleanest fuel, and right now prices are the commodity prices are soft. So there is an opportunity to invest in the gas companies. We think that the uh, many of the stock prices are not discounting the potential the company has. So vehicle registration in Delhi and Maharashtra has improved. The CNG volume growth numbers are there, and we think that the CGD space is a place where there is high pricing power. So we estimate this going to be a steady 7% kind of CAGR volume for companies like this, and we are assuming very minimal terminal growth. So, and a very attractive valuation. According to us, it's almost trading at 8 times FY25 earnings, and we give discount to that about 25%. Still, we are arriving at a target price of 12.55. So, at lower levels, Mahanagar gas and oil and gas sector, especially the gas companies, can also be added to your portfolio.
All right, fair enough. And of course, the other trigger of crude oil prices will also follow suit. Would you be looking at the paint companies, say stocks like Asian Paints, Berger Paints, for example, all of these, because paint derivatives also, I mean, they derive a lot of raw material from crude oil. Will this benefit them now?
So they do benefit, and obviously this will help them improve margins a little bit. But we are a value conscious broker, and we think that the valuation at this point leaves no room for upside. So we actually have a reduced rating on Asian Paints. Some other companies where we had a positive view, Berger Paint and Kansai Nerolac, they have about 3 to 5% upside left. So I would not recommend new exposure at these current valuations into these companies. Though at lower level, I think right now the Kansai is trading around 320 or so, maybe around 305, 300 levels. Kansai can be looked at from the paint sector if you want to have an exposure at that level. Uh, I would like to add that the right now what we have seen is the uh, urban consumption side stocks doing well. The higher end and luxury end stocks have done well. For now onwards, I think that the staples and the rural income related stocks, the stocks exposed to the lower side of the pyramid, that stocks are likely to be um, rotated into by the fund managers. So maybe we can look at stocks in that sector that would benefit us more towards next 3 to 6 months.
Okay, it's an extremely difficult task to find value in a market that is successively breaching record levels on a daily basis, and of course the wide cross section of the market as well, which is the Nifty 500, the Nifty mid cap and the small cap indices, along with many sectoral benchmarks are at record highs. But Mr. Vakil is at it, and we'll continue to quiz him. But this is the time for pre-open trades, and let's look at how the Nifty is reacting. Remember, today is the day for the weekly expiry for the index. It's most likely to remain quiet for two reasons. One, you have the credit policy coming in tomorrow, and over the past 5 sessions, the index has already appreciated 4.4%. It's a 63-point downtick on the index, 20,879. Let's look at what Reliance is doing. It's up 0.65%, 2477. You have a very smart gain on TCS. Remember, today is the last day of the buyback. As also, we are also tracking the 3580 TCS long call on the option side. ITC is in the green, 0.5% higher, 466. The Nifty is rapidly losing its red color and inching towards the green. It just has 24 points higher, 20,961. Will today be the day when a digit will change on the Nifty? It's most likely, we are most likely to see 21,000 today. Let's see how the day pans out. What is in weakness? Okay, Infosys down 0.22%, 1471. Hindustan Unilever down 1%, Bajaj Finance down 0.7%. ICICI Bank is flat, Axis Bank is flat. The Nifty is now consolidating around the 20,956 mark. Let's look at what's happening in the F&O space, and in the F&O space, which is bereft of the index heavyweights. The first stocks that are doing pretty good: Oberoi Realty 6% higher, 1548. Delta Corp 4.5% higher, 145. BEL, one needs to pay attention to this one. The company's announced a fresh inflow of orders, 162 rupees, a fresh record high, 3.75% higher. Cement is buzzing. This is Sakshi's favorite sector, Shree Cement and ACC. Tata Power is inching towards 300. Let's look at the Nifty 500 stocks. Very strong traction coming in on Adani Total Gas, 10% again higher, 1158. TV18 broadcast, announcement of a mega merger of TV18 and other group companies into the parent Network 18, 57 rupees, 1.4% higher. A very well-known mutual fund has also picked up 1 crore shares in the open market yesterday. What else is buzzing? You have BEML on the defense side, 1.8% higher, 2475. We'll pay more attention to these prices, let them settle out. The Nifty, of course, now flat at 924. In a while, Rajesh Palvia will be joining us, but till then, let's pick Mr. Vakil's brain. Devarsh, you've mentioned Federal Bank on the banking side in the mid-cap space. What looks good to you in the large-cap space, especially in the power sector that is really, really moving up? Any value left there?
So, shorter term, there may not be that much value, but over a longer term, I still feel that the power generation and distribution space has a lot of room. We have been bullish on many power generating companies on the thermal side, NTPC, NHPC, GSW Energy. Unfortunately, those are now above our target price. Uh, on transmission side, compared to the other private sector transmission company, Power Grid do offer still some about 15% kind of upside. It is trading around 210 or so, 220 or so. We have a target at 256. So another 15-20% upside in a monopoly transmission company. Power Grid is still there. So if somebody want to just keep adding to the sector, there is an opportunity there. At lower level, we do believe that the power sector will offer opportunities. In the past, we had coverage on Tata Power, Torrent Power, CSC, but right now I'm not recommending a new exposure at these prices in these stocks.
Okay, let's quickly look at some of the other stocks as well. Devarsh, how would you be looking at IDFC First Bank? You talked about Federal Bank. This stock will be in focus today because Warburg Pincus, according to some reports, is I think about to sell about 1.3% at a floor price of 85.7. We are looking for that block deal details, but then talk to us about IDFC First Bank. What are your thoughts?
So it is a clearly turning around, and we had coverage on it. Around 60, we gave a target about 80 and all this year. Before that, also we had multiple reports on it. But now coming at a level at which we are discussing it, apart from that, the supply overhang from the one of the large investors, that means that the stock will remain under check. So uh, as we have discussed, I like larger banks. In fact, ICICI banks like ICICI has still some room left from the valuation perspective. Though it is trading at an all-time high, still there is some 10 to 15% upside left for this year. So if I'm looking to add a larger bank, I look at ICICI Bank. If I'm looking to add a mid-cap bank, as we have discussed, Federal Bank looks good to me. I would wait for lower prices to uh, find a better entry point in stocks like IDFC First Bank right now.
Sure. Let me take this discussion to fintech space now. How about Paytm? Do you track this stock? There is news flow again that the company may be now looking to expand higher ticket loans. However, there is some caution from some brokerage houses which are on the disbursement run rate now on the company. How would you be looking at Paytm?
So we don't cover it. Some of the platform companies, there is now some path to profitability, but we remain value conscious. So there are other spaces in the non-lending financial side, and that's where we have been focusing. Exchanges, registrars, depositories, AMC companies. Those are the places where we had investors putting their money for last couple of years, and I think they have done phenomenally well. So we'll continue to stick to that side. These fintechs and larger platform-based companies, we will review them as and when we see a clear path to profits, which we don't see right now.
Okay, Rajesh Palvia, Head Technical and Derivatives Research at Axis Securities, makes his presence felt on market today. Welcome, Rajesh. What a fantastic week we've had so far, given the fact that we are now staring at the FNO expiry. A quick view on the Nifty and then your two stock picks for today.
Good morning, Shailji. Good morning, everyone. So, very strong momentum which we are witnessing in the market, and most of the index are now, enjoying all-time high trajectory. Nifty is comfortably holding about 20,000 800 mark. So that clearly shows that, yes, this rally can extend further higher, and maybe we can see a level of 21,000 also in next couple of trading session. Though on the data front, there is some call writing activity is there at around 21,000 level. So that needs to watch when we see any kind of unwinding action, that clearly gives us indication that we can scale up to the level of beyond 21,000 level also. At this moment, 20,800, 20,750 are the important support area on the downside. So if you get any opportunity in the decline to buy Nifty around 20,800, 20,750 zone, that's a good level again to re-enter in this market and hold your long position. For Bank Nifty, the important support on the downside is placed at around 46,600. That level is very important as the put base is almost around 46,600 for 700 zone. So I think if any dips comes in Bank Nifty also on the spot, that is a good opportunity again to buy Bank Nifty. On the higher side, 47,000, 47,200 are the immediate supply zone. Once we take out these level, then possibly this rally can extend towards 47,800 also. So across the board, buying interest is there. Bullishness is going to continue furthermore. The stocks which we like at this moment, that is GNFC and Apollo Tires. GNFC whole sector is showing good traction. Chemical as well as fertilizer space is showing good traction since last couple of trading sessions. GNFC is looking promising. The kind of open interest addition which we have seen in last couple of trading session, it clearly shows that this stock can scale up to the level of 767 70 zone. So one can buy GNFC with stop loss of 728. And the second stock that we like is from auto ancillary, that is Apollo Tire. uh, uh, Tire space is looking promising. Apollo Tire is clearly enjoying its all-time high trajectory, and the kind of breakout which we have seen in the recent past is clearly showing that this stock can show further more outperformance towards 475, 480 zone. So one can buy Apollo Tire with stop loss of 450.
This is the right time to also get in Mr. Vakil. Uh, there is this move in the market where some promoters like those of Ethos and Ircon are selling stake. Ircon, of course, is a government company. Today you have an OFS open for about 8% equity, 4% plus 4% green shoe. Are these signs of the market topping out?
So, um, government companies, many, has to meet the SEBI's criteria of reducing their stake, and government has become a smart seller. So, whenever there is a price rise, they are using this opportunity to liquidate their holdings. This may not be the ultimate top, but as you pointed out, such as large supply in the shorter term can create a bit of an overhang on a stock. Stocks like Ircon, if I memory serves me right, around 30-40 bucks last year we had started with the coverage. So it is not that these stocks are cheap; they have already run up a lot, and at a higher level, when we see such a supply coming in, that means that these stock prices are likely to uh, spend time here before moving to a higher level. So I will not be a new buyer in these companies at this level.
Fair enough. All right, the markets are settling in the pre-open trade, just about 5 points lower at 20,932 on the Nifty. You have oil and gas index as the top sectoral mover. Of course, autos, Nifty next 50, small caps, mid caps, PSU banks, consumer durables, and IT are in flavor right now. Among the top gainers in the pre-open space, from the Nifty back, you have Maruti, Adani Ports, Asian Paints, UPL, BPCL, Dr. Reddy's, Ultratech Cement. These are the top movers. From the 500 basket, you have Adani Total Gas, Delta Corp, BEL, ITI, Brightcom Group as the top gainers. Rajesh, let me just come to you. Good morning to you. Oil and gas space, of course, with the oil prices now falling further, the entire space is in focus again. It had been picking up pace, and we've been seeing BPCL, HPCL counters, IOC in flavor lately. They're again up in the pre-opening trading session today. Anything from the oil and gas basket that strikes you that you would advise a betting buy on?
Good morning, Sakshi. So, Both like HPCL, BPCL is looking very promising. The kind of breakout which we have witnessed in recent past is clearly showing that this segment is going to continue furthermore. Upside as the stock managed to view breakout of its long-term structure. So HPCL is our preferred choice, and we believe that this momentum can extend further towards 400 plus kind of level in short period of time also. So one can look to buy this HPCL with stop loss of 372. Even BPCL is also looking promising, very strong really last couple of week. Looking at the overall structure, we believe that if BPCL continues to hold above 460 level, then possibly this stock can also scale up to the level of 500, 520 kind of level in the short period of time. So HPCL, BPCL both are looking promising. Even from the same space, GAIL is also one should look at for to buy because this stock has also given a breakout in the recent past, and the kind of breakout GAIL is showing on the weekly as well as on the daily chart, that also looking promising for upside target of 148 to 155 with stop loss of 136.
Okay, Rajesh, we've also been seeing a lot of activity in the chemical space lately. Balaji amines, alkyl amines. We've been looking at a lot of these fertilizer names also coming back into flavor. Chambal fertilizers, for example, GNFCO already talked about as well. How would you be playing this entire basket? Your top one or two stocks from this space?
Yeah, definitely, Sakshi. We believe that this chemical space is showing a sign of bottoming out, and most of the stocks are recovering from their recent low and managed to view breakout on the near-term chart. So we expect this momentum can extend further in the December series itself for most of the chemical stocks. As you talked about, yes, GNFC is our preferred choice. Chambal fertilizer is also looking promising. From that space, RP industry is also looking very promising. The kind of breakout which we are seeing on the weekly chart is clearly suggesting that RP industry is now ready to cross the 600 level in very short period of time. So one should look at RP industry for upside target of 620, 625 with stop loss of 560. The another stock that we like from that space is that is Deepak Nitrite. Deepak Nitrite is also showing good traction since last couple of trading session, and we believe that one can look at to buy this stock also for
Right, sir.
upside target of 2300 to 2320 with stop loss of 2230. So I think the whole chemical basket is looking promising. So one should look at to buy these stocks for short term
Right, sir.
perspective.
Right. Let's look at the pre-open. Let's look at the opening quote, ladies and gentlemen. We have a 60-point downtick on the Nifty, 20,870. Remember, today is the weekly expiry of this index, and we've already rallied very sharply. Tomorrow is a major event on the Indian economy, the credit policy. Now let's look at what is contributing to this fall. Reliance, 0.3% lower, 2453. I want to see what HDFC Bank is doing. 0.5% lower, 1620. Let's look at Infosys, 0.3% lower, 1470. Remember, these are the three heaviest weighted counters on the index. Now let's look at the corporate banks. Axis Bank down 0.8%, 1112. ICICI Bank down 0.7%, 996. In the same breath, the Nifty Bank, whose fresh weekly expiry starts today, is trading 223 points lower at 46,610. Now let's look at the good news. ITC, TCS, flat. Today is the end of the buyback, 3,600 in front of you. As also the IT index, it's now down 20 points. What's rising very sharply? Aviation stocks, remember, you have crude oil prices at 6 months low. Indigo 2917 up 1.5%. Also the entire OMC pack is gaining substantial ground, 1% higher on BPCL, which is 477. What are the other stocks that are going strongly on the Nifty? Adani Ports, no let up in buying, 1.8% higher, 2% higher, 1039. Hero Motors, 0.1% higher, 3787. Asian Paints, a direct beneficiary of falling crude oil prices, 0.5% higher, 3268. We shift focus to F&O and look at top gainers. Delta Corp, 144, 3.7% higher. HPCL, 395, 2.9% higher. BEL 159.60, 2.2% higher. Indigo 2931, taking it away 2% higher. This is the first question we'll ask our friend Rajesh Palvia. He'll keep the charts ready till I look at Nifty 500. Okay, Adani Group, Adani Total Gas, another 10%, 1158. Adani Green, another 4.5%, 1635. Adani Energy Solutions, 1210, 3.9% higher. The management of JB Pharmachem was with us 2 days ago, 3% higher, 1535 for you. SW Solar, 4.5% higher, 405. The Nifty down 61, 20,876. Weekly expiry day, flat trade expected. Rajesh Palvia, coming to you first. Indigo, what do you say? Fresh record high, 2,900.
Yeah, very strong momentum in the stock since last couple of weeks, and looking at the all-time high trajectory, we expect this momentum can extend further as the whole market is in bullish territory. So I think Indigo can continue further more upside towards 3,000, 3,030 kind of level in the continuation of this up move. So one can buy this stock with stop loss of 2,925. I think a very strong momentum we can witness in today's session for Indigo.
Okay. Rajesh, can you also look
Okay.
at
Rajesh, what is the time? Rajesh, what is the time that you'll put a buy order on the Nifty in the next expiry? What level?
So I think Shelji, I think we'll use this dip to buy Nifty as Nifty is almost trading near to 20,870 kind of zone. So another 20, 30 point will give us some comfort zone to again re-enter in the Nifty with stop loss of 20,750. That's the stop loss we will put on the Nifty spot prices. So another 20, 30 point, if we get further more dip in the Nifty, then we will be in position to buy Nifty to deploy in the next expiry.
right?
Sakshi, what are you watching?
I wanted to ask Rajesh on Delta Corp. How are you looking at the stock? It's 6% higher and it's on the FNO space, the top gainer. The High Court of Calcutta granted interim relief to the subsidiary on the GST notice of 6,384 crores and therefore the reaction. Would you look at it positively now?
See, though overall structure is on the weak side, stock is trading below to all its important long-term moving averages. Overall structure is weak, but yes, some recovery is taking place as stock is already in oversold trajectory. Market sentiment is on the bullish side, so nobody wants to take any short side of trade. So everybody is waiting for some pullback action in the stock. So I think 150, 155 is very critical level on the higher side. Until the stock not crosses those level, I think there won't be any significant short covering action will play out in this stock. So I think one should use this pullback opportunity again to exit from the stock as overall structure is on the weak side only for across all time frames. So 150, 155 is the level. If you get that chance, you can exit from your long position which you have already created on the downside.
Okay. The auto space, Rajesh, can you look at some stocks over here? We are seeing momentum build up on Eicher Motors. It's now at 4,078.8% higher. Of course, the record run for this one continues. M&M is in focus among the top gainers in the FNO action too. Maruti is half odd percent higher at 10,677. TVS Motors at 1897. Sona BLW from the ancillary space is also up in trade. We were discussing this stock as one of the topics of our guests yesterday. Bharat Forge, another one that a lot of our guests have been bullish on. Balkrishna Industries, again from the tire space. So the entire auto ancillary space is up in trade. How would you be looking at this?
So overall, tire space is in bullish territory only. Most of the auto stocks are already showing good traction and already enjoying most of the stocks are enjoying their all-time high trajectory also. The auto space, one should deploy buy on dips kind of strategy in most of the auto stocks. Eicher Motor, yes, we like this stock as overall structure for Eicher Motor is on the bullish side. Last two trading session we have seen some profit taking, but again stock is holding above all its short term medium term moving averages. So we expect that till the stock is holding above 4,000 mark, then the momentum is likely to be on the buying side only. and one can look to buy this stock for upside target of 4250, 4300 on the Eicher Motor on the high side. Your stop loss should be at around 4000 level. Another stock from automobile space that we like is Tata Motor. Very strong momentum we have seen in last couple of months. Overall structure is looking bullish. Stock is almost trading near to all-time high trajectory, so one can look to buy this stock also with stop loss of 705. Upside target we expect in this stock towards 750 to 760. And the third stock from automobile space that we like is that is you already spoke about that Mahindra, and Mahindra is also looking very promising. And we have our buying view on this stock with stop loss of 1660. Upside target we expect towards 1740 to 1760.
Okay, let's look at the broader markets now. Nifty still down 61 points, 20,875. Within the 19 indices that we track on a daily basis, the trend is negative. About just 4 are in the green, of course, led by the Nifty Energy Index, 0.7% higher, 32,500, 32,050. The advanced decline ratio is today in favor of the bears, 1100 stocks in the red and 800 stocks in the green as far as the National Stock Exchange is concerned. The top losing index in today's trade is the Nifty Media Index, down 1% at 2347. Let's look at where the action is in terms of price. Coming to you, Rajesh Palvia, Power Grid, 227, fresh record high, lot of momentum in the sector. This is again a Nifty stock. What is the chart of Power Grid telling you?
So blue sky territory for Power Grid, and looking at the buying interest at even at all-time high, we believe that yes, this stock can continue furthermore upside as a very strong buying action in current week itself. We believe that this stock can continue furthermore really towards 235 to 240 for trading perspective. So one can remain on the long side of trade with stop loss of 223. So Power Grid, yes, it's a buy from our side also.
Right. Let's look at news driven stocks. IRCON down 7%. Remember, an OFS from the government to collect 1200 crore rupees by selling 8% stake opens today. 158 was the floor price, and 158 is where IRCON is, down from about 171, which was yesterday's close. Let's look at the 20% circuit that was on the downside on Paytm. Again, news driven. Let's look at BEL. These are the stocks that are showing strong momentum either on the long side or the short side and are extremely high beta. Rajesh Palvia, BEL to you, 1.7% higher, 158, news of strong order flows. What can be done on this counter?
So definitely this space is looking very promising, and continuous buying flow is taking place in most of the defense related stocks. BL is one of the stock which is continuously showing good traction in terms of buying. A stock is almost now trading at all time high level. The kind of breakout after a brief consolidation on the weekly chart is clearly indicating that fresh buying momentum is taking place. 170 is the next positional target where we can see this stock in next coming weeks. So one can look to buy this stock. Buy on dip should be your strategy at this moment. For trading point of view, 153 should be your stop loss.
Okay, let's look at Paytm. 197 shares are now down 20%. It is the worst day after listing for Paytm, a 20% down circuit that you can see. And this is especially on the news flow that Paytm has decided to scale down its low ticket postpaid lending business, coming after RBI really recently tightened the norms for the unsecured consumer lending as well, and is going to be looking at higher ticket loans right now. Devash, I will take your view here. You were talking about already a cautionary view you had on Paytm, saying that till the time the company reports a slew of profitability, you're not going to really look at it. How would you be looking at this reaction coming in on Paytm, and what would you advise investors holding the stock right now?
Nothing can be much can be done today or in the shorter term because of the negative coverage. There is a tremendous overhang of the supply, and that means that the stocks are falling. So my advice would be not particularly do risk counter, but the in an environment where we have reached to a level where when you are investing into companies or trading for short term, at least have a risk management in place, or B, when you are investing in a company, you better check what are the reasons why you are investing in it, and if there is any correction, whether you will be more willing to put in more money into it, because at such juncture, I'm sure volatility is going to increase, and we don't want to get whipsawed by such small movements in the market. So, my advice would be general to look before you leap, and better avoid companies where you don't have long-term convictions at this juncture in the market.
Okay. At this level, do you think that it is going to be like catching a falling knife? Anyone who's looking at this point to enter Paytm, I mean, I just wanted that view also.
Right. So, as I pointed out, we don't have active coverage, so I won't be able to give you an exact level to enter.
Okay.
But I usually avoid this space.
Can you also look at Tata Power? Is that a space that you track? The stock is now at 300, fresh record highs coming in. The stock has been in favor, of course, the entire energy and power space. And now you look at 2% higher for a 300 level for Tata Motors, Tata Power.
Right. So that is the space where we are actually longer term bullish on the prospects. We do had coverage on Tata Power. So if you were to ask me what are the levels at which I will be more comfortable entering into companies like Tata Power, maybe between 200 to 230 kind of a level. So substantially lower, maybe around 15% lower from here. If ever we get to entry points, I'll be will be willing to look at companies like Tata Power at these prices. That is, according to us, is the fair value, and we keep reviewing these levels. So, few quarters down the line, if company continue to perform, we will also change these levels.
Okay.
Okay, let's again touch base with the market. It's almost 9:30, and the index, the Nifty is down now 86 points, reacting to two things. One, extremely overstretched technicals on the long side over the last 9 days, and today, of course, is the weekly expiry. So a lot of profit booking happening in the option space as well. 81 points down, 20,856. The first support level on the index has been taken out. Remember, yesterday's low on the index was exactly where it is, which is 20,850. Let us see whether this low holds or not. Otherwise, the second support level is now at 20,810. We'll keep an eye out on all these numbers for you. Now, what else is buzzing? There's profit booking across the board. Hindustan Aeronautics, the market darling, is now down 47 points at 2670. We have profit booking in Mazgaon Docks, 23 rupees lower, 2092. We have strong cuts coming in on Midhani, 2% lower, 393. Zentech, 3.5% lower, 744. Shipyard stocks are doing well. Cochin Shipyard, 1288, still in the green. Let's look at the high beta space. Where are you seeing profit booking? Because the wider market is also lower. Sakshi pointed out Paytm. Really interesting, Sakshi. The lower circuit is now opened, which basically means that a lot of buying support is coming on this one. I don't know whether that's buying support or covering of shorts, but whatever it is, you have still a downtick of 18%. And at 668, remember the low was 650. It's an 18-point uptick from day's low. Remember, this is a super bull market, and you just might see some good support coming in from people who missed out the stock at 1,000 rupees. Okay, what else is down? Angel One, 2% lower, 3,076. Policy Bazaar, 1.5% lower, 830. Remember, these are all super high beta stocks. Within the PSU space, where do you see profit booking? Ircon, we've discussed 7% lower, 158. ONGC, remember, falling crude oil prices mean a negative move for ONGC. 2.5% lower, 197. JK Bank, 2.5% lower, 113. You have Bank of India 1.2% lower, 115. There are just minor losses, 0.5%, 1% lower on many PSU stocks. What is gaining ground? GIC Ray 5.8% higher, 310, and NIACL 236. So these are two questions from the high beta and high conviction space to Mr. Palvia. Public sector insurers, Rajesh, what would you say to GIC Ray and NICAL? Should we stay away, or these are chances to again get back into the counter?
Shalji, even if you look at the private sector insurance company, general insurance as well as the life insurance company, both are showing good traction in today's session. Be it SBI Life, HDFC Life. I was just about to bring your notice on these stocks. NIACL and GICRE both have shown very good buying interest, and almost both stocks managed to give breakout on their long-term chart structure. So NIACL, National Insurance, yes, we do still have a bullish view on the stock. Even if you get any decline towards 225 to 15 level, is a good level again to re-enter in this stock, as the long-term chart is showing a breakout, and whenever we get these kind of breakout on the long-term chart, that momentum continues for furthermore upside from the current level. So looking at the market scenario, yes, we hold our bullish view for GICRE as well as for NIACL at this moment. Buy and dips is the strategy. 210 is the stop loss for NIACL for upside target of 270. For GICRE, we hold our bullish view with stop loss of 295. Upside target we are projecting towards 340, 355. And from F&O space, from life insurance space, SBI Life is also looking very promising. Looking at overall structure, we expect that SBI Life can also show further more traction on the buying side, and possibly we can see a level of 1500 plus kind of level in short period of time. So one can look to buy SBI Life also with stop loss of 1445.
Okay. Rajesh, can you look at APL Apollo Tubes, for instance? And can you also look at Balkrishna Industries? I know that you were positive on Apollo Tires. This entire auto ancillary space with some of these stocks buzzing in action, how would you look at them?
Yeah, definitely. So as I already mentioned that, this tire space is looking promising, and Balkrishna Industry is also on our radar. But I was searching for outperforming stocks. So Apollo Tire was on my preferred choice. But Balkrishna Industry is also showing, consolidation since last couple of trading sessions, and looking at the overall structure. Once the stock crosses about 2640 kind of level, then we can see a continuation of this up move towards 2800 kind of level in a short period of time. So Balakrishna Industry, one can look to buy and accumulate at this moment with stop loss of 2550. So this stock is also looking promising at this juncture.
Okay, and how would you look at the entire cement basket? We've been discussing a lot about Ambuja Cements over the last 3 odd trading sessions, Ultratech Cement, Sanghi Industries, Kesoram. We've been discussing this entire space amid M&A action as well. How would you look at them? Your top favorite stock from the cement basket?
So as we see that, sector leader Ultratech Cement is enjoying all-time high trajectory. So most of the stocks which were under consolidation is also showing some good catch-up rally. Though Ambuja Cement and SEC is a different game that is linked with the Adani Group, and most of the Adani Group stocks have done well. So Ambuja and SEC is in a different league at this moment. But if we analyze the most of the cement stocks that are clearly showing that, this may show further more upside momentum from the current level. Our preferred stock is Ultratech at this moment. Buy on dips is our strategy. 9100 is the stop loss to buy and accumulate the stock, and we expect that Ultratech Cement can continue further more upside towards 9600, 9700. Even Ramco Cement is also looking promising, and we believe that once the Ramco Cement manage to give breakout above 1040 level, then this really can also extend towards 1100, 1120. So most of the cement stocks are showing good traction, and I think one should remain invested in the cement stock. Buy on dip should be your strategy, as overall sector outlook is looking promising at this moment.
Right. Okay, let's discuss some of the defense-based stocks now. Cochin Shipyard, it's up 0.8% in trade. Bharat Dynamics slightly up in trade, about half odd percent. BEL 3% higher amid the news flow again. We also have Mishra Dhatu Nigam, that's slightly up in trade. Paras Defense and Solar Industries now up in trade. From the defense pack, would you still look at some value creation that can happen from these current levels after the recent run-up, Rajesh?
Yeah. So this sector is clearly in uptrend, and whatever dips we are getting in all these defense stocks are ready with buying interest on the downside. So buy on dips is clear strategy for these all defense stocks, and I think whether you will get dips or not, that market will time will tell us. But the strong buying momentum across the board in all these defense stocks which you have mentioned, and we believe that one should remain invested. Don't be in a hurry to book the profits in this space, as a lot of buying interest is there, and this sector is going to continue furthermore upside going forward. So I think rather to book profit, one should look to buy whenever you get any volatile market and you get any chance to buy these kind of these sector stocks in decline. You should be ready to buy and invest in these stocks. So Cochin Shipyard, clearly we expect this the breakout which we have seen after a brief consolidation, that clearly shows that this is really can continue further higher towards 1400, 1500 kind of level. Your stop loss now should be towards 1240. BDL is clearly outperforming, a very strong breakout on the weekly chart, and I think BDL Bharat Dynamics can continue further more upside towards 1400, 1500 kind of zone. So buyout dips clearly is the strategy for most of these defense related stocks.
Okay, let's mark the Nifty now. The 20,800 level on the Nifty, as I was pointing out 5 minutes ago, has held. And what would be the best way to play it? Let's look at the 20,800 call for the week expiring December 14th. And this one comes to you, Rajesh Bhai. What would you do here? We've seen an intraday low of 119. It is now at 227. I'm talking about the call, and the day's high was 248. Any short term trade that you can mark on this one, or am I overreaching myself?
No, definitely, Shelji.
Let's
We
look at
use
the
this.
December 14 call, please.
Yeah. So definitely, Shelji, we
Just
have
just a
already
moment,
deployed.
Rajesh bhai. Uh, yes, please continue. Now we have the right one in front of us.
So as I already mentioned in my commentary itself, that we are ready to deploy our trade around 20,850, and almost we have seen that exact low of 20,850 on Nifty spot, and we have already deployed our long side of trade in the market as we were waiting for this decline to initiate the long trade. Now those who wants to buy for further more upside, 20,900 call option of December 14 expiry, one can look to buy at this moment, and which is trading at around 159, 160 kind of rate is there. So I think one can look to buy this is call option, as the support is already taken by the Nifty around 20,850. And I think now if we cross about 20,900, 920 level on the Nifty spot, then I think call writers will be on the back foot, and then we can see a momentum to extend further higher towards 20,980 to 21,000. So 20,900 call option of 14 December expiry, one can look to buy at this moment with stop loss of 125. Upside target we are expecting towards 220 to 230.
Okay. Please also show the 20,900 Nifty call expiring December 14. This is the one that Rajesh is marking. For the moment, it's trading at 158 rupees. So something from my side, which is 220 rupees, 20,800, and something from Rajesh's side, 20,900. Both these calls are for the Nifty index expiring on December 14th. Please keep these two on your screen. Let us see how they work out. At the moment, Sakshi, we have a nice rally coming up in Tata Power. Remember, you had asked Devarsh about it. Let's get Rajesh Palvia's view. 304 for you, Rajesh. Fresh record high. What would you do?
So all power space is showing good traction, be it Tata Power, NTPC, and other power related torrent power. All power stocks are showing good traction. Since last couple of week, and Tata Power is clearly outperforming and enjoying all-time high trajectory. We are having our bullish view, expecting target of 330, 340. So one can hold their long position with stop loss of 296 to hold the Tata Power also for upside moment, further more upside momentum at this moment.
Okay. Fair enough. Let's quickly also again look at Paytm shares. They are the ones that are in focus today after the 20% down circuit that we saw. It has pulled up from that, and you are now seeing a 14% dip. Some buying happening at those lower levels, 696 odd levels currently for Paytm as well. But we'll continue to watch out for this stock as we go forward from here too. All right, Rajesh, if I have to ask you one or two stocks that you have thought about for the next year, 2024, we're just about 15-20 days away from the year end. Tell us your top two stocks for the new year.
So Sakshi, we expect that real estate sector can show good traction in next couple of months. So I think for 1 year perspective, DLF is our preferred choice at this moment from real estate space, and we expect that DLF can do well, and possibly we can see a target towards 800, 840 in next 1 year time frame. So one can look to buy and accumulate DLF in the decline. We are suggesting here keep your stop loss at around 600. So buy on dips is the strategy for DLF for 1 year time frame, and 800 to 840 is the target where we are projecting on the higher side. Another stock that we like for 1 year perspective, that is CDSL. CDSL is though we have seen very strong run up in stock in recent past, but still we believe that CDSL can be a stock where we can see further more upside going forward, and we expect a target of 2400 on the higher side for CDSL in one year time frame. So buy on dips is the strategy one can accumulate in the decline, and with stop loss of 1750.
Fair enough. Well, thanks a lot, Rajesh, for being with us on the show and discussing all of these stock ideas with all our viewers. Always a pleasure having you with us on Business Today Television. Hope to catch up very, very soon with you again. Right now, the Nifty is down 55 odd points at 20,881. What we'll do is we'll quickly take a very short break right now. When we return, we will discuss on our corporate traders section on Gokul Das Exports.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Welcome back. You're watching Business Today Television. This is Market Today. I'm Sakshi, and with me is Shail Bhatnagar. And now it's time for our corporate radar section. The company on our focus today is Gokul Das Export, and the company's top management is now with us. Siva Ramakrishnan Ganapati, the Vice Chairman and MD of Gokul Das Exports, is with us. Welcome, sir, and thank you so much for taking the time out for this discussion. It's always great to speak to you and understand, what more are you really doing as far as the textile space is concerned. Let me, before I discuss with you the Q2 earnings, what has gone by and the outlook going forward, We recently, there was news flow that Narayan Murthy-backed company has picked up a stake in your company. Could you give us more color on that? What stake is that? Because usually the tech tycoon, picks up stakes in technology-focused companies. Why the interest in technology-focused, in textile-focused companies now?
Good morning. Thank you for having me. This investment of Catamaran has been on for about a year or something. They've just increased their stake in the company. Now, it's their call as to, why they make their decisions, and I can say very little on their behalf. So, the question really you need to pose to them.
Okay. Right. Let me ask you, sir, on your Q2 earnings now, there was a dip. The Q2 earnings really came in weaker than expectations. If you can help us with the reasons. We did see the revenue falling to 509 odd crore rupees from 576 odd crore rupees. The profit after tax also fell to about 24 odd crore rupees from 46 crore rupees. EBITDA fell to 25 crore rupees. Margins also shrank. What was the key reason that you actually saw a downhill in this quarter?
So this is just a culmination of a series of events that happened in the markets. If you look at the global markets, and for us, the principal markets are United States and to a lesser degree Europe. Both of these markets had excesses going a year before in terms of demand, and brands started building a lot of inventory in anticipation of high sales. There was also supply chain problems, which also resulted in a lot of inventory being in the pipeline. Once the ships started docking on time, they also got saddled with excess inventory. So in this year, they have actually bought a lot less. In fact, US imports are down by about 23%. European imports are down by 16%. That means across the board, all retailers have purchased almost a quarter, 25% less than what they would have otherwise. So there is a, secular market demand reduction because of excess inventory with the brands. So this performance is more or less in line with that. Most of our brands were really working on clearing up the inventory. And we had indicated that this is indeed the case, well in time, almost a year back, that this is going to happen. We are seeing this ease going forward. So in the second half of this year, we are seeing some traction coming back as the inventories have been more or less liquidated. Most of the brands have liquidated 80% of their excess inventory, and now they're coming back to purchasing. So, we in the third quarter, we are producing for spring 24, and in the fourth quarter, we'll be starting for summer 24. We are seeing traction come back. So I think it's a phase which happens when, because of the market conditions in the West, high interest rates, high inflation, etc., the demand was slow. They were saddled with excess inventory, and hence the manufacturers' demand from the brands fell. So that was the underlying cause. We feel that the worst is behind us, and we will start seeing growth going forward.
Okay, a very warm welcome to you, Mr. Ganpati, on Market Today. And of course, Gokaldas Exports has been one of the strong outperformers that we've seen on the charts as well as the stock markets. It was somewhere like 396 rupees in the middle of May this year, and at the moment 927. You're also amongst India's largest exporters of textiles. Now let's look at long term. There are rumors in the market, at least not being able to confirm by us, that a lot of demand for global textiles is shifting rapidly from China, from Bangladesh, and from Sri Lanka to Indian shores. Is this just anecdotal evidence, or are you seeing your buyers from the western geographies moving away capacity towards India?
Okay. So we are seeing capacity coming out of China to other regions. So Vietnam is a big beneficiary of whatever capacity is coming out of China, and we are also a beneficiary. So we have got orders which were hitherto being manufactured out of China. Many of the brands that we talk to, they are downsizing their purchasing from China much more sharply than other regions. So keep in mind that we were in in a regime or in a time frame where the buyers were buying a lot less. So if you look at the relative buying, India was relatively much better compared to China. So that itself indicates a shift. Now, is there a shift happening from Bangladesh and Sri Lanka? I would say, yeah, the jury is out. I don't think that that trend has really started. But if an FTA happens with UK, and that's in the works for quite some time, I'm confident that some of the UK-based brands will shift from Bangladesh to India. So many of the brands feel that they have overexposed themselves to Bangladesh. There is also a little bit of political uncertainty there. So they would like to de-risk themselves. Now the question is that the duty advantage which they enjoy, especially for Europe, of 12%, is too high to pass up. But once we get a level playing field, we may see some movement from Bangladesh to India as well. But otherwise, it's really China. China is 10 times bigger than India when it comes to garment exports. That's the big opportunity for India.
Right. So you expect maybe a lot of capacity from China to move towards India, Mr. Ganpati?
It will happen, even from Vietnam, because these places are getting very expensive. There are also geopolitical factors which are playing up, which would move the sourcing to India. If you look at companies like Walmart, they have actually gone ahead and indicated that they would want to source much more from India, and that's a general trend across large retailers. So it's bound to happen that more and more sourcing will happen from India. If there are strong Indian players who can step up to the plate, I think I see a good opportunity in the next 5 years for Indian exporters.
Right. Mr. Ganpati, traditionally it's the Western Hemisphere, West Europe and US, which has been the main buyer of Indian textiles. But given the way those nations are and their economies are contracting, I will not use the word collapsing, this presents a bit of a problem, existential problem for Indian textile manufacturers. There are no new markets because why will Chinese buyers buy from you?
Correct.
How is the textile industry dealing with this conundrum that your main markets are economically going through a very, very strong downdraft?
So if you look at the global apparel trade, it's about 500 billion. If you look at United States and Europe, they are about 15% and 14% of the global apparel trade. That's the quantum that they buy. And these are still very, very large markets. All other markets are very, very fragmented and small. So even let's assume that these markets don't grow. They're not declining by any yardstick. In fact, even last year, that's 2023, US retail sales grew by 2 to 3%. So these are not declining by any yardstick. And even if they remain stagnant, I think they present a very, very large opportunity. All the other opportunities are much smaller in contrast. Asia, that is Far East, could be an opportunity with Chinese costs going up. Japan and other markets can also open up for Indian apparel manufacturers. But again, relative to the Western markets, these are somewhat smaller sized markets, but opportunities do exist in Asia too. Non-China Asia.
Okay. Sir, could you also help us understand, what is the demand outlook for the second half from your top 5 clients, and what does the order book really look like in H2?
So we're seeing we're seeing the traction pick up. I would say that initially H2 versus last H2 we are seeing growth. The growth are in of the order of 10% or plus minus. But that's about it. My suspicion is that as we move forward, the growth will growth momentum will pick up. What I am looking at is the growth coming back, and that's an important point to track. If they that's a signal that inventories are coming down and the brands are coming back to the market to pick their goods. So this is a good sign. This is early green shoots of the market reviving from our standpoint. That is the garment market. It should hopefully continue the momentum.
Right. Sir, could you also tell us on your recent Atraco acquisition, which was seen very, very positively by the street as well? We saw your stock prices really rally after that news came in. How has Atraco really contributed in Q2? And if not, by when will this acquisition start to meaningfully contribute to your overall top line?
So we are still awaiting regulatory approvals for Atraco to be merged into Gokuldas. So at the moment the acquisition is not complete, and I hope that sometime in January we should be able to complete the acquisition. So we will see the first signs of Atraco revenue come in from Q4 onwards.
All right. Right. One more stuff I wanted to discuss with you, sir, and that is on your margin outlook. What is the fair band of expectation on your EBITDA margins for H2 and for the entire fiscal year, sir?
Oh, so for I mean, what's the entire, the first half. I think the second half will remain more or less at similar levels. Our endeavor will be to try to improve it. But really speaking, I am looking at the path going forward. Believe that we have, with growth coming in, we have the potential or the opportunity to improve our margins by about 1 to 1.5% over the next 2 to 3 years. And that's what we're working on by more automation, by expanding into low-cost geographies and so on and so forth. And that journey will continue. For this year, I think the margins will be what they are. When the demand is far lower than supplies globally, there will always be margin pressure. Gokuldas does not believe in dropping prices significantly, so we can kind of hold on to our prices and hold on to our margins. But it's difficult to improve our margins in this year given the demand-supply mismatch that occurs.
Okay, fair enough. Well, thank you so much, sir, for being with us and discussing all the insights about the business outlook going forward. All the very best to you. We shall hope to, be in touch again when the next quarterly results are around the corner. And all the best until then. Many thanks for being with us on Business Today Television and on Market Today. Let's get back to the markets now. 60 points down in trade, 20,874 currently on the Nifty right now. And of course, we're actually seeing a whole host of stocks. Ircon International was pointed out by Shail. That stock is actually down in trade with the OFS news as well. I think it's about 8% downtick can be seen on that one. Shail, what else are you watching out for?
Sakshi, I have a very keen eye out on Tata Power. Remember, this is something that our friend Vineet Bojlinkar suggested yesterday. That given the capacity expansion that this company is getting into, there are chances of doubling the top line and profit after tax in less than 5 years. And the stock is reacting fairly substantially. Of course, this is a record high level. And it's not only Tata Power that's doing phenomenally well. Positionally, NTPC, Adani Power, JSW Energy, it's the entire power pack, Sakshi, that's doing phenomenally well on Dalal Street, and for a good reason. Electricity demand, of course, is shooting through the roof as far as India is concerned. And these are the power producers who have lined up project after project, whether it's in renewable energy or in traditional thermal power. And that's the reason why they seem to be doing well. These are, of course, relatively lower priced blue chips that were suffering on account of action shifting to mid caps and small caps over the last 7-8 months, Sakshi. It's the unlocking of demand that's coming in on the last street for such counters, and therefore you see a strong uptick. I'll just mark the Nifty and the Bank Nifty for you, and then we'll wrap it up. Nifty down 63 points on its weekly expiry day, 20,873. A bit of a profit booking happening after tomorrow's main event, which is the credit policy, and of course after this very, very sharp run up that we've seen in the past 5 trading sessions. It's the first day of a fresh weekly expiry on the Nifty Bank, down 264 points, 46,572. Over to you, Sakshi.
Absolutely. A lot of stocks then I will mark for you. Right now on the Nifty, what's doing well despite this overall Nifty muted trade is Adani Ports 1.28% higher, Aisha Motors 1.6% higher, Dr. Reddy's 1.5% higher, Power Grid, Ultratech Cement, the other gainers of over 1%, SBI Life, Maruti, Asian Paints. These are the stocks that are doing well. But what's on the downside? You do see ONGC that's down in trade, 2.4% down. Clear impact of the crude oil prices slipping below $70 a barrel. HUL, Bharti Airtel, ICICI Bank, Apollo Hospitals, L&T and ITC are down in trade as well. Of course, among the sectors, it's a 0.5% decline on the Nifty Bank as pointed out by Shell. Barring the auto space, that's 0.5% up in trade. Realty space, that again is up by 0.4%. Healthcare, that's slightly up in trade. Consumer durables and oil and gas. Rest of the sectors have actually seen some pressure coming in, with the FMCG now down by almost 0.8% as well, among the top sectoral losers at this point too. So that's as far as the markets are concerned. But what we'll quickly do is we'll wrap up this edition, but we will continue to track the markets for you and how this day really pans out on the weekly options expiry and right ahead of the RBI's monetary policy. So what you can do is stick to us on Business Today Television. Don't forget to subscribe to this channel, as we will continue to monitor the market prices and tell you where are experts really focusing on as far as markets are concerned. Many thanks for being with us on this edition.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Record highs on the Nifty all through, and the Gift Nifty indicates